Well. Good morning, good afternoon, good evening, whatever time zone that you're watching this awesome tax break update from Urban Management Group. Hi, I am Danielle Irvin. Many know me as Dr. D. I am the executive manager of Urban Management Group. And I am here just to keep you informed on what's going on with your business, with taxes, different funding opportunities. Many of my clients have increased in their sales because they began to structure their hustle into a more credible and sustainable company. And I say hats off to them. I am also getting a lot of email chatter that some starting to be approved and then waiting for the deposit from the EIDL. That has been a nightmare. Oh my goodness, but I am so glad that Isabel Guzman has really went into that department to help streamline and speed up the process so many of these business owners can obtain the funding that they need to carry them over into the place where they were. Now, I do understand that many may not get back to where they were in 2019 because I'm still driving and seeing spaces being closed. I saw last month a restaurant and it looked like they had just opened, and my heart went out to them that they have a police sign for their restaurant. They have closed down. So, and I really believe because of the delay in the process of the 4506T madness between IRS and SBA caused a lot of small businesses to fold, but by the grace of God, we thank him every day for looking out for his children, and many more approvals, emails is coming. So you guys out there that are still waiting, and I'm hearing a feedback because um, I'm trying to make sure that my screen is shared. I did a whole video for you guys and went through it, and the screen was not shared. So I'm gonna piggyback on what I was talking about earlier. We want to make sure I stay swift with this. Alexa, give me 15 minutes on the clock.
15 minutes starting now.
All right. So to right now, today, as you know, they are not extending the deadline for the first part of the tax uh, returns. The deadline is April 18th. You still have an extra 2 days to complete that process. All right. For business owners and nonprofits, you have to May 15th. Okay. But I advise all my clients, don't wait till the day of, because that's when it's going to be very hectic. The service is going to be very active, and you just don't want to take that chance. Meanwhile, if you know you're not going to be able to make the deadline, you still have an option. Extensions are still available. I have behind me October 13th, but it should be October 15th is the deadline for the actual 2022 tax season to be over with. Okay, so you can also put in an extension, go to your tax preparer. My clients are already up on who my extenders are every year. So they have no problem with me putting an extension in for them, and then we'll attend to their business afterwards. Now, what I want to share today, I want to kind of relieve some anxiety. Okay, and while I'm talking, I'm going to go ahead and share my screen and make sure that I can get online with you guys and show you all what is happening with your tax refund. Okay, many are very concerned, they upset, I'm hearing it. And what's happening is the tax rates have decreased, meaning, I want to say the right word. They have decreased the tax rate and up the annual income. So it's like an individual last year underneath $10,000 have zero tax due. This year, they're automatically at a 10% tax rate. Yes. 2021. And whoa, it has hurt a lot of taxpayers. So I want to show you guys what you can do right now to prepare yourself for next year. Okay. Next year is very important. Now, how can, okay, you're sharing your screen. Yes. Put that down there. Okay, Diane. I don't see it on here. I just see the little log. Y'all bear with me because I have to learn how to do this because I have some very important information to share with you guys. See, I can see it, but I can't see it on my other screen. Okay, go back here. I'm gonna get it, y'all. Okay, multiple participants can share. No, this one. Okay, so I still can't see it. Oh my God. You can now pin or spotlight multiple people. No, I don't need the spotlight no one. I need the screen to be shared. Okay, help me, Holy Ghost. See, that's why I'm doing this now. Share computer sound. Breakout rooms. I'm trying to understand why it's not showing you guys. I'm double pressing it. Okay, stop share. Who can share? Only the host, multiple can share. Who can start sharing when someone else is sharing? I don't know. I am so sorry, you guys. Oh my gosh. What is happening? Video settings. And this is so important. I need for you all to understand what is happening to you all. And okay, maybe this is it. Okay, share screen. Okay. Oh my gosh, thank you. All right, I see it. All right, you guys. Thank you for being so patient with me. All right, so what is happening? The tax rates have doubled. All right. And it is sad, but it's happening. All right. So the tax rates, you guys, I'm going to read off an example to y'all. The tax brackets are not as intuitive as they, because most taxpayers have to look at more than one tax bracket to fit in an effective tax rate. What has happened, as I stated earlier, as you see, the tax rates have increased tremendously. If you're making less than a single individual making less than $10,000, they are already at a 10% tax rate. Hey, the household, 14,200, you at a 10% tax rate. If you married filing jointly or a qualifying widow or widower, you had 19,900, 10% tax rate. And if you married filing separate, married filing separate just like being single. So you're going to fall into that same tax category. Now, this is the kicker here. Anything over $9,951 up to $40,000 a year as a single individual, you at a 12% tax rate, people. Yes, 40,000 to 86,000 a year as a single individual, you at 22%. Imagine a single individuals, no dependents, no itemization, not very healthy, but you go and pay your tax, you go do your tax return, and you had 22%. That's a big ouch. And you know how it's a big ouch? Because on that W-2 that you bring into that tax preparer, when my customers come in and the first thing I want to look before they even start asking for price, I say, no, let me help you out right now. Let me see that W-2. I look at that W-2, and because I am a tax professional and a tax specialist, I can look at that W-2 and right off the bat, I can let you know if you're going to owe IRS or IRS going to owe you. And from what I've seen thus far, many people are owing IRS. Now, you fuss at the tax preparer, you fuss at IRS, but you don't call and fuss them. You fussing at the person that's right before you, you know. But your thing is, you can go and fuss at your HR. But I'm advising majority of you that's watching this video, you're going to have to make an effort to be proactive with your finances, especially on these jobs. HR and payroll are not responsible to explain to you about your tax rate. That's why you have a financial advisor. Your tax preparer really is not liable to tell you about your tax rate. You have to be proactive from going forward to find out what's your tax rate. So I'm here because I am a specialist and I love what I do. And I know hardworking taxpayers and consumers such as yourself need to have some type of recourse when you go and file your tax return, that at least you can have at least $500, $600, $700 coming back. And woe unto you guys that are head of household, you have 1, 2, 3 children, but you're making almost $86,000 a year, and you go and prepare your taxes and you at a tax rate of 24%. Oh my gosh, that is heartening. So I want to help you all right now to look at this chart. I want you to screenshot this chart, okay, and look at that W-2. If you have not completed your tax return yet, look at this W-2 and see where you are. And this is for this year. Now, y'all took a snapshot, okay? So now let me show you what's happening next year. Okay, what is doing? It's not letting me bring it down. Okay, there it goes. Now, next year is increased. Take a screenshot of it. So I'm preparing you guys this year. Go to your HR or your payroll, whoever is completing that W-4, and I'm going to show you right quick what it looks like. If you fall into any of these pay IRS on November 10th announced the new tax brackets for 2022. That was last November. But whoa, we didn't know, as the consumers say, of course not, because everything was about COVID. They're not trying to make sure that you can prepare your refund. And not only that, stimulus, which we didn't continue on getting stimulus like other states are, and that's a whole nother video with that. But check this out. There are 7 new tax brackets for the most ordinary income for 2022. 10%, 12%, 22%, 24%, 32%, 35%, and 37%. And as I revealed to you guys, here go the chart. You can look at your W-2 right now and see where you fall. And if you fall in between, this is single, head of household, married filing jointly, if you making between $20,000 to $83,000, you add a 12% tax rate. That's good for married filing jointly. That's why it's good to be married and file your tax return jointly. I do understand that they have other situations that may cause you guys to file separate. And another newsflash, if you are married filing separate and you have dependents, you have just alleviated all of your credits for the children. Yes. So that's a whole nother counseling section. And prayerfully, you have already been proactive to figure out how you're going to present your annual income and all of your deductibles to your tax preparer. Okay, so now since I'm able to share the screen, let's go to irs.gov. I want to reveal to you guys, and it's very easy for you to go to irs.gov, not none of the subsidiaries that have irs.gov/.com. No, because eventually they're going to get some money out you. And anything that you need right here, you can go straight to IRS. Okay, so we want to look at the W-4. This is really the beginning of your tax return, not the W-2, it's the W-4. The W-4 going forward, you guys, is no longer one dependent, two dependents, exemptions. No, it's according to your tax rate. The screen that I showed you all earlier is tax rate. So you want to go to your payroll department right here. And if you would like, go ahead and go to IRS, fill out this form here with your address. This is just a fictitious address to show you guys how easy it is for you to do this. Houston, Texas, whatever state that you're in. Okay, your social over here, make sure you put your social, the primary person that's on that tax return. If you're married, who is the primary taxpayer? If you're single, your social security will be right here. Okay, right here, this is how you're going to identify yourself. You're going to print this form out and bring it to your HR or payroll department. If you're single, you're going to click here. If you're married, you're going to click here. If you hate a household, how do you know you hate a household? Just because you're single and you're paying your own bills, that do not qualify you as hate a household. Okay, see, my time is up. Alexa, thank you.
Absolutely. Happy to help.
Alexa, stop the alarm. So I have to go, you guys. It's already been 15 minutes. All right. So hate a household represents, I don't need that anymore. Thank you. You are taking care of someone. You're taking care of a dependent, or you have a parent or a sibling. They have now, you can claim a uncle, a brother, a cousin. If they're in your household for the entire year, besides parents, you can take care of your parents and support your parents. If they're outside your home, they have a T-factor test that you have to pass to claim as head of household. All right, so that's a big difference too. Okay, but because I'm single, I press single. I go down here. If I have 2 or more jobs, you click this if you have 2 more jobs. Okay, but normally I don't click anything. I want them to take out as much as they need to take out, and I just have to budget my money, you guys, because I'm telling you, next year is gonna bite even harder. I mean, ooh, it's gonna bite even harder. It's gonna tell you how to calculate if you have $200,000 or less as a single individuals, and multiply that by your children under 17, if you have children. Okay, you're gonna put that deduction share. One child would be 2,000, But I'm advising y'all, I am not, let me put a disclaimer, I am not a tax lawyer or financial advisor, okay, or a tax attorney, okay? But from my experience, and I do have degrees in business management, I have my accreditation and certification every year annually as a tax professional, practicing, well, they don't want us to say practicing, reviewer, a tax reviewer, okay, with IRS, PTIN, I pay and go through my training annually. So from the knowledge that we are being taught, this is how I'm sharing this information with you. And also from what I'm seeing individuals going through every day through tax season. And yes, this one was a really bite. Like, so one of my customers said, wow, well, they sure getting us. So I knew it was something. They giving out all this money and now they just taking it right back. That was her opinion. I was like, ouch, maybe, maybe not. I'm not able to comment on that, but I do see where the tax rate have really, really put some individuals in a bad spot. Okay. Now, over here, you're gonna put your total right here. If you feel like, oh, that's gonna be taking too much money out, Miss D, I don't know. Well, you have to make your own judgment. But normally when I filled mine out, I didn't put nothing there. And I wanted them to take extra money out. I need y'all to take $25. Well, no, take $50 out extra. That's all was on mine. Then I went down here. I signed my name, wet signature, they call it a wet signature. So you literally sign your name. Don't type it in, sign your name, bring it to you, and that's all you have to do. That's how easy it is. I advise everyone. I'm just advising and suggesting, okay? Make sure you put your name up here, correct address, pick your filing status, go down here, and let them take out an extra $10, $25. All this other stuff, don't put nothing there. Don't put nothing there, you guys. Okay, because they're gonna take less out. And at the end of the year, from what I'm seeing people making $50,000, $60,000 and only taking out $500 off the withholding, and they see the Social Security at the right rate, and they felt like, oh, well, they took out taxes, look. Yeah, but that's for Social Security. That's for Medicare. You're not going to see that right now. Ouch. All right. So I pray that this help you guys. Click the link below. I'm also going to have a awesome, we finished with this. I'm also going to have an awesome second quarter workshop for my business owners and sole proprietors. I want y'all to come on April 3rd, save the date. I have the link at the bottom. It is a registration and I will limit the entry, okay? It's free for you to join in. I believe after 5 minutes, I'm gonna close the doors because we don't want no interruptions, because I'm going to really be sharing on our second quarter of our business, where we should be at in our business. And plus, there's some awesome opportunities to increase your business credibility by getting line of credit, how to make sure that all your paperwork and stuff in order so you can qualify for awesome SBA funding. Yes, the funding is there, and yes, they are releasing money, but from what I've been told from the SBA representative, and I am part of the National Small Business Association Leadership Council, they are saying the main thing that I've been proclaiming since 2017, that a lot of the businesses do not have their business in order. They have not filed their tax returns, or if they did, they have wrong addresses, don't match, they don't have their business structure properly. It's just a lot of things, key elements that they're looking for. And I have that information for you. So I welcome you guys to join and click the link below and register for April 23rd at 9:30. I think it's 9 or 9:30. You'll see on the link, and reserve your spot to join us on April 23rd. And For the rest of you guys, I am Danielle Irvin. Many call me Miss D, Dr. D. I am the executive manager of Urban Management Group, where we're here to serve you, the sole proprietors, faith-based organization with 501c 3 incorporations, and Black women in business over 50. We are here to help you stay in compliance with your industry. That's by way of bookkeeping, tax preparation, tax planning, and business consultation to level up your business for this upcoming wealth transfer. Until then, I'll see you on the next video. Share, hit the notification bell, subscribe to this channel, Urban Management Group. It's so awesome. We are going places and I want you to come with us, okay? Don't forget, we have an awesome free ebook that you can download to help structure your focus to see, okay, what do I really need to do to get my business lined up? And as you see, when you browse through the YouTube channel, I have a lot of other information. The date may vary, but it's the same information that can help you in your business to structure your side hustle, that gig. You know, a lot of y'all gig workers out there feel that y'all don't have nothing to file your income tax. Yes, you do. If you're a DoorDasher, Uber, Lyft driver, they call that gig worker, side hustle. Guess what? You can level up that business, you guys, and really be very lucrative with it also. Well, let me go. I'm already past my time. Until next time, bye. See you later. And don't forget, our It's Time merch. We got some new merchandise coming out. Just stay tuned. You subscribe to us and you will not be left out in the loop. Okay, bye-bye.